So rolling over into the total cryptocurrency market cap today, we have seen some more profit taking from the massive rally that we saw that started at the end of last week. We have now pulled back into the $2.6 trillion dark pool on the total cryptocurrency market cap, which was our first case for concern. If we cannot hold bullish above the 2.6 trillion dark pool, I am expecting a nice pullback down into some repositioning or possibly some reaccumulation areas. First, starting at the 50 moving average, which comes in at about 2.4 trillion. The second bearish target would be at about 2.3 trillion for some nice repositioning on some good major blue chip layer ones. In case that does unfold, set yourself some alerts and alarms. Of course, not financial advice, but what is happening in the total market cap today? What's going on in the fundamental backdrop? I'm only going to read the first portion of today's fundamental report, as I'm still going to have to update this post New York session as we roll into Asia after we get NVIDIA earnings. So I won't chuck this out to you guys until after that, about an hour into Asia session. But today, crypto has seen additional profit taking as markets digest inflationary reports that were not necessarily enough to force the Fed into another hike, but also not soft enough to remove that risk. Core PCE increased to 0.2% month over month and remained at 3.3% year over year, while headline PCE rose 0.2% month over month and remained elevated at 3.7% year over year. Inflation is therefore moving at a manageable pace month over month, but the broader level remains well above the Fed's 2% target. Ideally, what we want to see in the core is both month over month and year over year inch closer, preferably the year over year rate coming back towards the 2% target. So 3.6, 3.5, 3.4, so on and so forth. And I think we got to a low of 3.5 or 3.6, maybe even 3.4, but now prices have come back up. The economic data today also gives the Fed room to remain patient. We had Q2 GDP, which expanded 1.5%, while durable goods orders increased 1.1% in July, both above the 0.0% threshold. The economy is still growing, and business investments, particularly spending around AI infrastructure, remain an important source of support. This isn't an economy currently screaming for lower rates. At the same time, 1.5% GDP growth isn't strong enough to suggest the economy is overheating either. The result is essentially the environment that we've been discussing, where the Fed can afford to hold rates and wait for more evidence before possibly cutting or pushing back rate hikes entirely. That helps explain some of today's profit taking in crypto. We didn't receive the dovish inflation surprise that would have given markets a strong reason to aggressively increase risk exposure. The data keeps a Fed hold firmly on the table, but another hike still remains possible if inflation begins accelerating again. That makes Chair Kevin Warsh's Jackson Hole speech, starting on Thursday rolling into Friday, increasingly important because markets need more clarity on the Fed's reaction, function, and what would actually trigger another hike. That's if he even delivers any commentary on monetary policy and the economic outlook. I mean, this dude could literally get on the stage and give everybody a freaking middle finger and be like, look, I'm not commenting on monetary policy or the state of the economy. Let's just talk technology, something like crazy out of the blue. So I'm expecting that, to be completely honest with you. I wouldn't be surprised if that actually happened. And if not, then we'll play the narrative hawkish or dovish, regardless of what his comments are. Nonetheless, today's PCE report is backward looking, and some of the biggest risks are happening right now. Middle East tensions still remain unresolved. The Strait of Hormuz has not fully reopened, and the U.S. continues increasing economic pressure on Iran. President Trump has also indicated that both economic and military options still remain effective tools, which linger the possibility of an escalation in the background. That keeps oil extremely important. If tensions eventually ease, Hormuz fully reopens, and oil continues declining, one of the largest forward-looking inflation risks begins disappearing. That would likely be supportive for Treasury yields, Fed expectations, Nasdaq, and crypto. The opposite still remains equally important. Any renewed military escalation, higher oil, higher future inflation expectations, higher yields, more hawkish Fed expectations would likely put pressure on risk assets. We also, of course, have the trade war back on the table. U.S. and Canadian tariffs, where Canada announced retaliatory tariffs as much as 50% on roughly $28 billion of U.S. goods. scheduled to begin September 8th. So it'll, of course, be beneficial for market sentiment if on September 8th, Canada and the United States are seen high-fiving each other and these retaliatory tariffs don't come into fruition because Trump scales back his tariffs of 50% and, jumps them down to, I don't know, something well below 50%. Like he comes out and says, look, we're not going to enact 50% tariffs on Canada. We've come to some mutual trade agreement and tariffs are only going to be 30% or 25% or something much lower than 50. And then Canada doesn't have to retaliate and they get along and we're all happy go lucky. And the trade war, gets pushed into the background again. But for now, September 8th is the date to pay attention to. We'll see if these retaliatory tariffs do come into fruition. So that's something that we're paying attention to. Outside of that, of course, Middle East tensions, future inflationary figures, any comments or rhetoric from Fed officials in the coming days and weeks ahead, oil prices, dollar strength, and treasury yields. All right. Outside of that, right now, we don't really have any fundamental catalyst outside of what happened with the treasury buyback last week to really boost risk appetite. And so that's again why we're seeing, in terms of fundamentals, profit taking in crypto. We've been covering this for you guys accurately publicly on Twitter. So we're going to continue to do so and show you all that this is where everybody should be aligned heading into this new digital era of finance where institutions are about to flood in on a massive scale. You do not want to be a part of a community or not involved in a community that does not have access to these institutional dark pools. And right now, and for a very long time, we are likely to be the only retail based community on the face of the internet that has access to these institutional levels. So we go back, and dates are important to us here at CYPRX, August 23rd, 2026. What were we saying? What levels were we giving out? What were we trying to align the general public with? Let's first take a look at XRP. So on XRP, we mentioned in our bearish scenario, after such an aggressive expansion, a pullback would not be surprising. The first major area that I would be watching is $1.36 to $1.29. As long as buyers defend this region on a deeper retracement, the broader recovery structure still remains relatively healthy. Now, if $1.36 breaks, that is my last line in the sand for my bullish thesis. My bullish thesis being a sustainable break and hold above $1.57. Now, considering that we're back at $1.36, we would need to see $1.57 reclaimed, would keep momentum intact and open the door towards another move back towards 166. Above 166, the next major hurdle is at 177 and eventually 198. If price does end up continuing bullish above those levels, I will start to look towards higher level targets around $2.13 and $2.31 for some nice intraday profit taking to reposition back in at lower level dark pools. So right now the bearish scenario is starting to unfold. Below $1.36, next on our radar we have $1.29. And if $1.29 does happen to break in a worse scenario environment, that does open the door for a revisitation of the overarching base at around $1.16 to $1.07. So taking a look at where we had mentioned this to you guys on XRP's price, we'll first cover XRP. So you can see the timestamp where I put this post out to you all. We were trading at $1.57. Right at the dark pool at $1.57 is where this post was put out. And I mentioned a healthy pullback down into $1.36 will be the first bearish target. We have now accurately come straight down into that dark pool, level to level. So now the question is, can $1.36 hold? If it does, we need to see buyers sustainably break and hold back above $1.57 before we become overly excited of a much higher move on XRP. So something that looks like this, buyers defending $1.36, pushing aggressively through all this sell volume, turning the sell volume where they passively trap buyers back into a support, breaking above $1.57, turning that into support, and then we can start to get excited of a possible revisitation of $1.66 to possibly $1.77. Bullish scenario number 2 would be a break below $1.36, and then $1.29 becomes a reasonable next target. Possible revisitation even of the 50 moving average at that point in time will likely align somewhere between $1.29 and $1.16. We could see price pull back down into that environment and then flip back bullish. That for me would be the last line in the sand for XRP continuation moves. If we don't get one of these two scenarios, now again, we could see price consolidate at these areas and just accumulate for weeks at a time. So it might not be an instant bullish reaction, but as long as we're trading above roughly around $1.29, I would say that this recent profit taking event and pullback for possible reaccumulation is still healthy on XRP. Where I would start to be concerned of a much deeper retracement is if we break bearish below $1.29, as I mentioned. That would then open up the door for a much deeper retracement on XRP back down into $1.16. I will personally only start to buy XRP again if we break back down into $1.16. Underneath of $1.16, under much more risk off adverse environments, if we do see that unfold, would be $1.07 as the next area of interest on our radar. Then, of course, if we do end up breaking $1.07, I've been called crazy so many times, but I have to keep these levels on our radar. If we break below $1.07, that opens up the door. I don't think that if we do engulf all this buy volume with sell volume, that buyers are going to be able to defend. There's no reason for me to believe that if all of this buy volume comes into fruition and sellers are able to equally match it, that they're not going to stop there. We're probably going to see these lows targeted, and then that would open up the door for a much deeper drop back down into 91 cents on XRP, which I don't think a lot of people are ready for. But you can see I have alarms and alerts set at roughly around 96 to 97 cents to let me know that it's headed towards that way in case it does come into fruition. But far stretch away from where we're currently trading at now, sellers definitely need to put in some work, and buyers still have the upper hand as long as we're above these EMAs and as long as we're above $1.29. So for now, a bearish move is off the table until $1.29 is broken to the downside and turned into resistance. Upside targets still remain intact. So you have both upside and downside targets on XRP. And then, of course, just in case, we do have these upper level dark pools that have started to pop up now that we've popped up into about $1.66 on our radar. As for Solana, all right, what were we saying on Solana's price action? Let's just go back. Let's take a look at the analysis. We mentioned to you here, Solana broke the $85.11 threshold and rallied directly into $103.08, where price is currently trading around $95.48, holding slightly above the dark pool at the 9416. The bullish scenario is if buyers can establish the $94.16 threshold as support, the next major upside target becomes $103.08. A sustained break above 103.08 would open up a much larger window towards 115.81, followed by 130 and 139. So looking at that scenario first, we come over to Solana's price action. And once price was trading at $103, we mentioned that Solana's price could possibly pull back into 94.16. Price pulled back into 94.16, and since then we have seen some slight absorption. Sellers have been unable to break back below 94.16, but we did mention the first bearish target on Solana after profit taking at $103 would be 94.16. So now buyers have an opportunity to defend. So the first bullish catalyst on Solana would be if we can see buyers hold at 94.16, where sellers are unable to gain the upper hand, breaking below this previous areas of interest where buyers were trapping sellers, defending the dark pool and becoming aggressive enough to push up until 103. If we see accumulation here in this area, buyers then aggressively pushing through dark pool, no man's land, breaking above 103.08, turning that into support would be a very healthy sign that we're likely going to see a nice squeeze up into the next dark pool, or at least halfway up into the next dark pool, anywhere in between $110 to $115 as our next bullish targets. Bullish scenario number 2 on Solana, which I still think would be a healthy correction, just like on XRP, I still think it would be a healthy correction if we pulled back into the 50 moving average, would be if we pulled back down into that area, which coexists with the $85.11 threshold. I would probably start to buy some more Solana if we break below 90 bucks. That's my kind of like overarching threshold. I've gathered most of the Solana that I've bought over the past consecutive couple of months sub 90 bucks, most of it at 60 bucks, some of it below 65. So for me, I'll start to see a discounted opportunity or a possible reaccumulation environment if we break back below 90. Underneath of 94.16 opens up the door for a revisitation to stay in a bullish environment of 85.11, where we could see buyers defend, push price back to the upside, hopefully engulfing 94 and 103, turning these levels into support, and that could open up the door for a much higher move on Solana. To the upside, we do have 115 through 139 on our radar in a bullish environment. Underneath of $85, which is the last line in the sand for buyers, If we do not see buyers defend this level, that's going to open up the door for a much deeper retracement on Solana's price action. Below 85, the next bearish hurdle becomes 80.14. Underneath of 80.14, a full-on retracement back down into the initial move where the Treasury buyback happened at $74.38 is not far-fetched. Buyers could still make an attempt to defend from here, but under that premise and that environment, I personally don't think that sellers would attempt to stop there. If we break back below 74.38 in a risk-off environment, $69 and $63 is back on the table. The lowest level dark pool right now that we have on Solana is $54.71, and that dark pool remains untouched. So I'm still keeping it on my radar as a possibility in an extreme risk-off environment. But just like on XRP, sellers have a lot of work to do to put in to get price down there. And for now, I don't see that happening as long as price is above 85.11. Canton, another level and pair that we've been accurately going over publicly for you guys on X. Let's look at the analysis on Canton. Bearish scenario. If sellers defend the 12.361, so to the freaking pip, we mentioned the first major level that I would look to watch on a pullback is the 11.021 cent threshold. So taking a look at where that analysis was put out to you all on Canton, you can see that was put out at a local high at the 12.361. And we said if buyers can defend the 12.361, expect a pullback down into the 11.02. And here we are. We saw sellers defend the 12.361. Profit taking has unfolded, and we are now headed back towards the 11.021. Holding that level would allow Canton to consolidate without necessarily damaging the broader recovery. Now, if that 11 cent threshold fails, then downside comes around the 0.892 and the 0.7373. So next on our radar, if the 11 cent threshold does not hold as support, that for me is going to open up the door for a much deeper retracement on Canton down into the 0.8928. And we also can see right now that the 50 moving average is converging with Canton's price action at around the 11 cent threshold. So it would be nice to see buyers, even if we came down into this last down candle before this up move, start to reaccumulate here and defend the dark pool, reclaim it, turn it into support, and then that could open up the door for a nice recovery case on Canton to push price back to higher level dark pools. To the upside, 12.361 still becomes that major hurdle for buyers to overcome before we get excited of any higher prices. And above that, 13.916 is that next line in the sand. Above 13.916, we do have 17.094, 18.194, and to the upside on an extreme bullish environment, 21 to 24 cents on our radar. But for now, I'm still bullish on Canton above 11 cents. A break below 11 cents, and I will start to consider possibly reallocating to Canton coin. If we start to break down below 11 cents, the next bearish target comes in at 8.928. Underneath of the 0.8928 on our radar to the downside, we still have 0.7373. But again, just like on other major layer ones, sellers do have some work to do to engulf and absorb all of this buy volume, which for now has not happened. So we cannot just anticipate that it's going to take place. We need to see a reaction net negative underneath of the dark pools. We need to see buyers get trapped, sellers become aggressive and create sell delta helds, which then will open up the opportunity for bearish signals like this. And for now, that is not to be the case. So with that in mind, you guys now have bullish and bearish targets on XRP, Solana, and Canton. We'll continue to accurately keep you all in the loop with these three pairs publicly on X and on YouTube. Again, for any of you all that want access to these levels, right, don't forget, you guys can head over to CYPRXtrading.com and you can tap in with our institutional scalper and gain access to these levels on whatever asset class or currency pair that you want access to.